This is how you invest in a quality company. It is every investor's goal to identify a company that could provide excellent returns with least amount of risk. Isn't that what we call a quality company? But how do you find one? Hello everyone, I'm Rakshith Pai, and in this video I'll go over exactly what you should look for in a business before investing. Before starting this video, if any of you wish to subscribe to a personalized investment services that recommends an investment plan for you based on your requirements, then check out ET Money Genius. More information on the services can be found at the end of this video. Let's get started. What should I look for before investing in a business? Number 1, MOAT. Whenever you invest in a company, invest so that you hold on to the company indefinitely. We want to create wealth here. So the longer you stick with the worthwhile investments, the more money you'll make. But what is a MOAT? A MOAT is nothing but a competitive advantage that only your company has. For example, Apple's MOAT is its brand value and loyal customer base. Regardless of how similar their product has been for the past 3-4 years, they continue to break their own sales records. That's Apple's MOAT. How about Coca-Cola? It's a soda that sells over 1.9 billion servings in over 200 countries in a single day. Their main attraction is their product itself, which has reached almost every corner of the planet. We must invest in a company whose product or services is well accepted among its customer base. One such that even if the competitor try to replicate it, they shouldn't be able to compete with your company. These are some of the Indian companies with strong moat around them: TCS, Avenue Supermart, Titan, Pidilite, Nestle, etc. Basically, for any product-oriented company, when the brand itself represents the entire market, and with service-oriented companies, it's their market share with regards to their entire market. Number 2, growth. You must be absolutely certain that the company you have invested in is growing at least at par with the rate the economy is growing, especially when it comes to its own industry at least. For example, India is the fastest growing economy in the world, clocking at least 7% GDP growth year on year. Look at the company you are investing in and its industry, and if your company isn't growing over the industry average, then the investment will not yield much returns. For example, the Indian IT industry contributes around 8% to the country's GDP, and the industry is growing at over 10% per annum and is expected to grow at the same rate for the next 3 years. Now look at TCS company's sales growth. It's at 10% compounded growth for the past 5 years. So when it comes to growth potential, TCS is a good candidate. Also note that the smaller the company is, the higher its growth rate will be. Invest in a company that's growing wealth without compromising its balance sheet health. These are some of the companies that are experiencing consistent growth. As I have noticed, apart from the COVID period, they have never budged for anything. In fact, they grew stronger over time. Companies such as Pidilite, HDFC Twins, Bajaj Finserv, HUL, Infosys, etc. One easy hack to check on a growth company is its share price. If you come across a company whose share price has consistently increased over time and the only time it is down is when the market is down, you can include it to this list. Number 3, cash. There is a saying that goes like this: revenue is vanity, profit is sanity, but cash is king. Here revenue is just to show off that we are making something and selling it for something else. Profit is what matters. But you know what is much more important? It's the cash. Consider a company that grows its sales at 10% annual rate while maintaining a 15% profit. But at the end of the day, the company is still broke. Do you know why? Well, the sales are growing, it's even making a profit out of it. However, because the cost is rising and the debt is piling up, there is no cash to show for it. Without proper cash to service its debt and to cover the added cost, the company could go bankrupt. That is why we say cash is king. Any company that has abundance of cash and knows how to use it well will rule the industry. For example, Apple company's cash and liquid investments total worth is over 200 billion US dollars. At any point in time, even if the entire economy is going haywire, the company will survive. When we say cash, it means cash and bank balance and also the cash equivalents, which include short-term investments. Basically any investment with a maturity of less than 12 months. Such investments include stocks, bonds, other marketable securities, treasury bills, etc. These are some of the cash-rich companies in India: Reliance Industry, State Bank of India, LIC, HDFC Twins, TCS, etc. I hope the video was informative. Check the link in the description to find out articles that are written explaining the topic discussed in detail. Now let's see what ET Money Genius is all about. Hi there. Do you take stock tips, invested in them, lost money? Well, instead of repeating the same mistake, earn better returns by subscribing to ET Money Genius. ET Money Genius will understand your risk profile and suggest different investment options for varying time periods, thus helping you build a very well diversified portfolio. High quality stocks that yield better returns are chosen so that you need not wait for years. So what is the expected return? Well, if you had invested as per the ET Money Genius high growth stock strategy for any 7 years in the last 15 years, you would have earned 22.4% CAGR. The wait ends here because with no additional work, you can earn a wonderful return just by subscribing to ET Money Genius membership. Check the link in the description. Thank you for watching.